What is going on, everybody? It's Why Me. You know the vibes. It's ExxonMobil time. Today we're going to talk about the stock, where we finished Wednesday, October the 18th. We'll talk about some of the opportunities for trades and things like that. So let's get right into it. As you can see, we closed at $112.95 on the day. In the aftermarket, we're at about $11 and $111.03. And the significance of those levels and just the price is based on what we talked about. We have formed a nice support and bullish reversal since our support was touched at 104.93. Each candle for the last 5 trading days have been bullish and have created new highs from the initial reversal on October the 12th, which was last Thursday, if you're curious. So today, Wednesday, almost a week later, tomorrow will be a week later, we've reached levels past and beyond 113. Today's high was $113.39. The low of day was $111.70. I found some levels and some options that I may go over. Again, this is not financial advice. Don't take it from me, take it from the charts. So, what we're doing now is we're looking at next week being earnings, October the 27th. What we'd like to see is a test of some of these highs that we made back in September. What we'd like to also see is a steady and consistent trend as well. We don't necessarily want to see a lot of reversals and pullbacks. However, there are some intraday pullbacks that allow for nice scalps and good trading opportunities. And I'll probably try to highlight one of those that I found. And it may work for everybody. It's not financial advice, obviously, but you can possibly take a trade based on one of these support levels that I found. And so I'll break it to you like this. Exxon looks like a very, 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 very bullish stock. And what we need to do is properly chart it so that when it comes our time, we're able to. So if you take a look at this particular option, this is the 117 call for October the 23rd. I found there being some nice support levels at 70 cents. So what I'm going to go ahead and do is mark a line here for 70. And I'll fix a line if it's not correct. That's 69. So let's go 70. So like I said, I found a nice support level at 70 cents for this particular stock. As you can see, it's slicing some support and resistance areas in half. So right now it's acting as resistance. However, this particular option, this particular contract, as you can see, is sitting at 75 cents. So with that being said, this may be something that you want to take a look at. Again, if you can catch it at 70, we haven't broke over 80 on this particular contract. But again, taking us up beyond the levels that we are now, we'll definitely see that particular contract being. So again, we're here back on the daily chart of ExxonMobil. You can see that we're trading in this channel. Very bullish sentiment overall for the last 5 trading days. It doesn't look like we're seeing any reversals that will bring us back below any of these levels right now. The wicks to the top are very strong and present. The only wick to the bottom was forming these supports, as you can see. On the daily, there are no bottom wicks. So you can see there are no sellers getting off. There's no indecision at these lows of these candles. Everyone involved in these particular 4 trading days have not allowed this particular stock to go below its daily low, or to wick toward the bottom. Which is basically telling me that there's no sentiment to sell on these particular levels. So if we even go to the smaller time frames, you can see from the 1 minute, from the 5 minute, that we are sticking to the upper part of that particular channel that I formed for you on the daily. So if you look at this line up here, on the 1 minute, why do I keep saying 1 minute? On the 5 minute, we're sticking to this trend up here in this channel. So again, very bullish when we stick to the top of the trend line in smaller time frames. And in the middle of it all, we have the 30-minute time frame, which segments the day pretty well. And as you can see from that level of support that we formed, we tested the upper parts of this trend, but the bottom, it bounced right off. Gap here, straight up. Another gap up. We're testing even over and outside to even get into this new, if you can look on the weekly, to this new formation here. So if we're trading in this new formation, it's definitely 120s and even possibly higher. We'll see what this earnings bring. But getting back to the 30-minute chart, you can see that we're testing this upper part of the trend, not seeing any lows, just right here, but otherwise not seeing any lows. The moving averages are trading in this zone, the 9, the 20, and the 50, the 200 acting as support. So like I said, we're looking overall bullish. On the 4-hour time frame, the 4-hour candlesticks have reached the 200 period moving average. And usually when a stock, again, touches and reaches the 200 moving average, two things are going to happen. It's going to get rejected by the moving average, the 200, or it's going to find support on it off the 200 and bounce. As you can see, 200 periods from a 5-minute perspective created a nice bounce going into the aftermarket. 200 moving averages from a 30-minute perspective also created a nice bounce yesterday, stacking all these moving averages in a bullish sentiment. You have the 200, you have the 50, you have the 20, and you have the 9 all in sequence. So we're looking for the 4-hour and we're looking for the weekly to match up with that. But as of right now, we have bullish sentiment overall on all of these charts. There was some definite news that came out for ExxonMobil as it acquired some other petroleum companies. And so what we looking at, and on top of that, with the with the WAR going on, stock and oil prices are definitely under scrutiny. And so what do you guys think? Leave it your comments. Are you making trades on ExxonMobil? Like I said, the stock overall looks very, very, very bullish. I don't see any any of these highs being taken out, even in the aftermarket. They appear to have the sellers getting off the train. When I spoke, I believe it was on the 10-16 video, when I spoke about those sellers getting smoked out and getting off. You can see it. You can see it in the higher time frames. You can see it on the daily chart. Like, there are no wicks to the bottom. Friday, Monday, Tuesday, today, no wicks to the bottom. This is forming a nice bullish trend. Where it stops, I don't know. We're going to continue to test the highs of this trend. We may test the low of this trend, but this is an overall bullish trend that took us from below $100, as you can see here, $99. This particular trend took us from below $100 all the way up to $120 in a matter of, let's calculate, 717, 718, and we went to $120 on 928. We went to $120, on 927. And so from 717 to 927, we trended relatively up aggressively. This is most likely my 30-degree trend line structure that I formed here, as well as this. And so, look, guys, it's pretty obvious. The writing's on the wall. The stock wants to go very bullish. So, if you guys check out the market sentiment overall, even for this sector, um, there's a lot of not necessarily indecision, but there are, it's not totally in confluence based on what the companies are doing. But Exxon is one of those companies that, it's just like an umbrella company that acquires a lot of small petroleum companies. So Exxon is one of the top dogs, and then they pretty much write their own ticket and make their own markets in a lot of situations. If we go to the trading view chart on a daily time frame, of course, and we look at it from a strat perspective, as I stated, that two down was the last two down that we saw. We found support in the 104 area. All of the other candles from then have been two bullish reversals on the daily. On a weekly, we're again having a bullish sentiment. And if you look at some of these levels that we have taken out so far, let's go over. If you look at some of these levels we've taken out so far, we've taken out 111.85, which is more or less the low of this particular candle. On the high side, 113.29. The high of day, I believe, was like, again, $113.39. So we're approaching taking out this candle, which brings us into another gap. The high of this particular, well, not necessarily the high, but the low of this particular gap is $113.08. So I'm sorry, I'm looking at it wrong. The low of this particular gap is 114.64. So as you can see, I got my glasses on today, and I'm still messing up. So what we have here again is if we break this level, which I'm going to say the next level to watch out for is going to be 114.11. If we break that level, 114.64 is in play. 115.03 is in play. And on the high side, 116.73. Wow. How many days will it take? How many days? Again, even if you look at this chart, there are no bottom wicks like that. This reads a little bit differently, but boom, yesterday, today, there are no bottom wicks. And the top wicks are getting smoked out. The top wicks are getting closed out. We can go to a smaller time frame to even look at this blue trend that I built, and it's a downtrend. It's a blue downtrend channel to catch a move that kind of crosses off of this 3-bar that we had, that top 110.61. So if you take that 3-bar and you draw like a imaginary line or whatever type of line across, you see the support here. And I was looking for the stock on yesterday to break the support. It never did. It even threed this little one inside bar here. So it never broke support. Volume always pointed up. So when we opened up today, our first bar was a bullish 2-bar, another bullish 2-bar. So we were pretty much bullish this whole time. We even threed today one of these 2 downs. So it doesn't show anything being bearish almost at all. And again, this is the last bar of the day. So we ended today's trading session on a 3, which again, 3 to 2 down. So it eclipsed this candle that went 2 down, which tells me that anyone selling that got off, or that was allowed to get off or liquidate their shorts or what have you, I'm sure they took a loss. But then the following bar, the immediate next bar, was a 3, and it's not by a lot. If we even increase the focus on here, it's not by a whole lot, but a 3 is a 3. And so we caught this 3 going up at the end. Most likely there will be volume at the open that takes us back up, or further up rather, into at 113, 114 level. So if you look on the daily, the entire day is a 2 up, crossing over and eclipsing, basically like a continuation. There's no body on this wick. So the wick's connected, which to me basically it forms like an entire candle. So there's no body here, even though that tells me anything shorter got bought up back to this level. Boom. This next level again, 114.11. So if you look at this, 113.36 to 114.11, it's not very steep. I'll even draw a trend line. And my Weeble trend line sucks, but yes, I got it. So again, this trend line is not very steep at all. To get to this trend line and to level this out, not very steep at all. We're looking at a situation where, again, we're going into earnings. Investors have decided that, hey, look, why I don't understand TradingView and why it's so not calibrated, if that's the right word. It's like with TradingView, you just gotta live with wherever it lines up. But if anybody knows the nuances to getting these bars and stuff like that lined up, maybe I'm working on a time frame that's too high or something like that. I don't know. But if you look, the low of this particular bar that brought us down. Again, look, this is October the 2nd, mind you. We're on October 18th, so I just want to let y'all know. This bar is from October the 2nd that brought us back down. The low of this bar is $114.55. Now, if this candle breaks this 114.11 level, we'll definitely see that bar low, and we're going to continue to trend up. I don't really see any reason to be bearish on the stock right now. $120 to $104 is a significant drop, but again, it's giving other investors and other people an opportunity to get in, to get on. So we're pretty much about $7 outside of the high. I don't see a reason why another great earnings report from ExxonMobil wouldn't take us back to the highs and even beyond them. My initial sentiment was 50-50, and I was just basically bearish on the account of looking for significant pullbacks, but the pullbacks have been very short. So guys, if you're playing pullbacks on this particular stock, any options, 15% might even be your maximum gain on a pullback intraday, to be quite honest with you, because on a daily level it's not pulling back. So if your long-term trend is bearish, looking for pullbacks off of these levels of support that is finding, I feel for you, because these levels that I had below 110 are gone. We're $2, $3, $4 above $109, going on $5. So I don't see any reason why you should be bearish at this time. This isn't financial advice, but if you look at it, two down, but we haven't seen a 2 down in a week. And the way that it's looking, and we're filling all these gaps, like I said, the last gap is it's a small gap, but it's from about, let's say, 114.35 to 114.59, but that can create some scenarios. And even I might even be reading this wrong too, just to give you another level, 114, let's just say the top of this bar, 114.07, not including the wick, 115.33. So that's about $1.25, give or take, penny, where we can create another gap scenario. Tomorrow, October the 19th, may be a great opportunity for that. So you may want to look for calls at the open off of a support level, off of even like a profit taking level. If we go back to the Webull chart and you want to, let's say, analyze a smaller time frame, because the market's going to open and we're probably not going to chop around. Most likely we're going to find our level, find our price target, and keep it moving. If you want to even go to tomorrow, let's just say here, this is today, this will be tomorrow. Pre-market, let's try this low of 112.46. Not that we'll touch it, but sometimes the pre-market has an opportunity to create a lot of sell-offs and a lot of strong wicks. So like even just going into today's pre-market, you can see this is a very strong wick that gave the appearance that we'd sell off. No, we just sold off into support 111.91, and it was a bit of bounce from there. Serious bounce. Intraday support 112.24. And so as a matter of fact, that's what we're gonna do. Yeah, because we got 2 touches on 112.24 for intraday support. So if you look tomorrow, let's go. Don't fail me now. Let's create a ray, a horizontal ray. 0 degrees, because that's flat. And this is how I chart. Feel free to comment any feedback. I love it. I'll welcome any feedback on upskilling. So again, let's create a ray. 2 touches, 112.24. Just to be concise, 112.34 is where my line is. But give yourself a buffer. So 10 cents, 112.24 to 112.34. And look for any support off of this level. I learned this from a YouTuber named Uncle Chartist. And this, for him, his theory applies to market sentiment when it comes to like the CPI data. And a lot of times, based on the reaction for the CPI, the first reaction, he says, is the false reaction. And just loosely applying that theory to this, let's just say this is the first reaction of the day to being resistance. And then you'll say, oh, look at this. In the pre-market, we found resistance at 112.90 and it got shot down. So when the market opens, we went back down to my support, and when the market opens, I'm taking puts because we got shot down. Look at all this resistance. That's exactly what they want you to think. We shot it down to a level of support below, basically like a whole number. So people are always looking for a discount, right? If something is $112, the people next door will sell it for $111.95. The person next door will sell it for $111.89. So you have to think about also getting a discount. Think about also a discounted price off the whole number, off the top number. So 112 being the top number for this support level. Think about where, and that's why I draw my support lines like off of the top level or off of the whole number. So 112, I'll draw like a support line 9 to 10 cents below it. 111.69. Those numbers are what do you call it? Whatever's in the head. Those numbers are theological. You know the word I'm looking for, man. I don't know all these big words, bro. But those numbers are psychological. Those are psychological levels, for, look, 112.34. Why wouldn't it be 112.50? Why? Because off the 50, I want a little break. So we'll go to 34. You know what I'm saying? Off the 49, I want a break. So we'll go to 34. Off the 25, I want a break. So we'll go to 20, 24. You understand? So like you got to look at those those numbers off the whole number, off the rounded up number as areas to get in. You can see that this stock right here at the in the aftermarket is at $113. So off of the whole number, we're gonna look for again 112.90. Where do we see 112.90? 112.91. You understand the games they try to play with you? Do you understand? Because this is what I'm trying to enlighten everybody on. It's more to it than, you know, numbers, and it's a game. They're playing chess. These market makers, they're playing chess. While everybody out here, they consider retail traders dumb money. We trying to play check, but you have to be able to outsmart these people and think outside of the boxes that they try to programmably put us in. You're looking at these support levels, you're looking at this pre-market level. I almost guarantee you that we look at the 200 period moving average cross this level of $112.35. Where do you think this stock, the moving average is pointing up in the same angle, in the same degree as my trend? It's splitting the channel in half. And none of these prices are finding support or even trading below. Even if you cut this channel in half, let's just say you cut this channel in half. I'll make another extended line just so I can show you, and then I'm going to delete it. Let's cut this channel in half. You got to think about the chart in quadrants. You got to think about the chart in halves and quarters. This is how you're going to be successful in trading. If you don't see the stock trending in this area, this is the bottom half of the channel. If you don't see the stock going in the bottom half of the channel, don't trade puts. Don't look for the stock to go below a level where it's finding support. Mark these levels out. They're significant for a reason. These levels are there to tip you off and to give you indications on how they're trading this and what price action it is. The high again was 113.39, so we could even mark this off because this was yesterday's high. Oh, we gonna get into it today. Don't worry. I hope y'all got time, cause today I got time today, cuz. You heard? Yeah, it might feel like I'm talking to myself, but when I looked at my views, it's 20 views, so I'm talking to 20 people. That's why me. We trying to get this money. You know what I'm saying? Don't trade your friends in yet. Bring them back and show them how we doing it over here. You know, I know there's a lot of people out here, and your friends don't believe in you. Oh, you tell them, oh, I'm trading stocks, whatever. Everybody got their own thing, bro. But look, this is where we at. And if you look at it on my 4-hour time frame, cuts it in half like butter. We find a support. Boom, support right here. Support here. My 4-hour time frame, bottom left. Y'all see my mouse? Support right here. What day is that? October 16th, 1:30. That 1:30 candle. Support. We're not going below that. And we're not abandoning structure. Don't get it twisted. We're not abandoning structure. I know I was talking about structure. You're not abandoning structure. There's your structure right there. Support, resistance, forms that dome shape, another support, high, lower day, support. So we go from lower day straight to the high. Lower day, higher day. Halfway, back around the higher day. All right, the day's over. But we ended the day, and I learned this from another trader. Much respect, Curly K. We ended the day on a hammer. So a lot of times, you go back and you look for bullish sentiment on the end of the day, maybe even how the market will open up tomorrow. We ended the day on a hammer. So we could quite possibly hammer up on tomorrow. I showed you the trading view chart. We ended the day On the smaller time frame, which time frame? I think that was a 30. Yeah. Last ball on a daily. Last ball on a 30-minute on a day is a 3. We might be looking smooth, babe. Might be looking smooth, yeah. But also, we got some news, man. Exxon acquired a smaller fuel company. So we started off the week Monday going crazy. And I found this article as well. If anybody wants to go over it, well, I guess you don't have no choice. But if you stuck around to this point, keep sticking around, man. I've been talking for 30 minutes, bro. You know what I'm saying? Like I'm doing this for the love. But we need to know some things. So again, this is how you trade these pullbacks. And this particular chart, if I could blow it up and stop scrolling like a foolio. Let me see. Let me get my game. Let me get back to my game. What the? All right. Yeah, nah. We just gonna go old mousy wousy. So this is when the stock was at $110.85. So this is either Monday. What was this? This was let me see. Let's go back over here. What was that stock? 110.85. Come on, don't do it. Oh, don't do it. We freezing. Don't do it. Okay. All right, we gonna get out of here soon because my computer's telling me I need to wrap it up. But when did we see? We saw 110.85. Let's say okay. So we saw 110.85 this week. So this article is not old. The price action is not old. You know, sometimes they'll go and talk about stuff from the week before, whatever, what have you. So check this out. He's marked off the high. That's that 120. And if you look, we got a nice volume down and created this outside bar right here. And boom, we went in bullish sentiment after that. And let's just go into the article just a little bit, and then I'm going to wrap it up. So, reading verbatim, it's been a volatile ride for shares of energy giant ExxonMobil since they set a closing high of 120.20 in late September. Thanks to a combination of sharp downside and crude oil prices to start October, investor concerns over the company's acquisition of Pioneer Natural Resources, ticker symbol PXD, for $60 billion and flaring geopolitical tensions in the Middle East, ExxonMobil gave up a quick 13% from peak to through earlier this month. So peak to through basically is from 120 to now, to date. So while shares have recovered from their recent lows around 104, they're still down about 7% from their highs of less than a month ago. So, you just got to figure out what side that you want to be on. It looks like we found support at 104, and investors said, all right, the geopolitical tension and all those things are fine and dandy and all of that. And we sold off significantly enough to get back in, hop back on the saddle, grab the pump pause, and start dumping. You heard? So my fault. I'm sorry. I'm getting excited, man. This money make me excited, man. Knowing where things are gonna end up, this makes me excited. And we're doing our research. That's the most important thing. We're doing our research. So check out this article, man. Let's go down and see who wrote it, by the way, just so we can give that person their props. So this is Aditya Raghunath with bar chart. This was written Tuesday, October 17th at 10:58. So follow this author if you want to. This is barchart.com. Thanks, Aditya, for the sound technical research. And, how will the acquisition benefit ExxonMobil? This is, again, Pioneer Natural Resources. It will be able to increase daily oil production significantly. In fact, ExxonMobil's oil production is expected to be 50% higher than its nearest competitor. Oh, so you got to even think, companies like, let's say like 7-Eleven and Circle K and all those places that you know, put their logo and symbol on top of the gas that they sell. Who's the supplier? Maybe it's ExxonMobil. So you got to look at that. We're going to dive deep into this stuff, and I'm going to get more research done. So like I said, appreciate everybody sticking around. This video has been 35 minutes. So I hope y'all got some value, man, because you can skip through it. I'm not going to segment it and do all those things. I don't have time for that, man. I got to go on to other stuff. I got basketball to talk about. I got everything else to talk about, man. But I appreciate y'all sticking by. Go check out barchart.com. It's why me. We going to end it off. Taking a look at that chart. We read it on the end. Listen, this ain't financial advice, but you might want to look at some calls on the open. Grab you 20 to 30%. Leave a runner. Grab you some multiple contracts. Leave a runner. Set your stop losses. 20, 30%. If you a big dog, 50%. Because you can average down and maybe grab a couple, you know what I'm saying, if you make a bad entry. But guys, work on your entries. We're looking at it. Levels of support are being formed. These are obvious levels of support. We've seen the charts. We've seen it. The charts are not lying. Levels of support. Support. How you spell that? Support. S-U-H port. You heard? Levels of support. Holla.